Hey YouTube, this is your guy TerrenceRe, the active trader. I want to do a quick video tonight on the best indicators to use for trading or investing. You can use these indicators. It really doesn't matter what time frame you want to do, 1 minute, 2 minute. If you want to be in and out, you can use these indicators. If you want to invest, you say, look, I don't have time to sit in front of a screen. I want to buy some stocks and I want to hold them. I'm going to show you how to use these indicators for that as well. So the first thing we're going to do is we're going to come up to this flask up here. Once again, I'm on Thinkorswim. So just so you guys know, I'm on the Thinkorswim platform. If you open up an account with TD Ameritrade, you can use Thinkorswim. You don't have to. These indicators, I would imagine, are on Robinhood. They're on TradingView, TastyWorks, any trading platform, whether it be E-Trade, they're gonna have these indicators. Come up here to this flask right here. Click on the flask, and then we're gonna come down to the Wilder smoothing average, where it says Wilder's smoothing. Now, I'm gonna show you a little trick. Now, all platforms, they may have this, but it may say something else, right? It may not say Wilder's smoothing. So you may say, well, I'm gonna show you a little trick that's the same thing as the Wilder's smoothing, just in case you're on the platform and you don't see that name, which Wilder's stands for RS Wilder, or I think it's like R Wilder. But anyway, Wilder was the guy's name that worked on this particular, I think he was an engineer or something like that worked on this particular moving average. But I'm gonna show you a trick. So you could look for exponential moving average exponential. So if you put that on there, and let's say I click on this little settings cog right here, pull this up, I'm gonna highlight this and put it on, and I'm just showing you just in case you can't find Wilder's, and I put it on 26. I'm just gonna make the color like, I don't know, yellow, so you can see it. You see it? It's the same moving average. So basically, the exponential 26-day moving average is the same as the Wilder's. So just in case you don't find Wilder's, you can use that as well. So I use the Wilder's smoothing. Hit apply, and it's there. Next thing we're going to come to the MACD, which stands for moving average convergence divergence. Now, I'm going to go over that in this video. So we're going to hit apply. There it is. Boom. The next thing that I like to do is the RSI, which stands for Relative Strength Index. And I'm going to show you why I use these. Now, this is, for the most part, sometimes you may see me use something different, but this is my basic setup right here. I like to do all of my analysis and charting, most of it on the daily. I may find a chart pattern on the daily, and then I may drop down to a lower time frame, maybe to enter the trade and determine how many days I'm going to hold it, or pick targets, this, that, and the third. So basic setup, right? What do I look for, and what made me trade CrowdStrike? So if we're looking at CrowdStrike, one of the things that you use these indicators for is you're going to look for, see what the MACD is, moving average convergence divergence. What is divergence? When you see the stock, now once again, I imagine if you're watching this video, but even if you don't, I'm not going to take anything for granted. Red candles mean it's going down, green is up, right? So one way you can trade is crossovers. You see right here where this particular line, this turquoise line, this moving average crosses over the slower line. So the green or turquoise is a faster, meaning it's a faster line, which means that it moves, it adapts to price action a little bit faster than the yellow line, which is a laggard line or a slower line. So when it crosses over, you can see right here, some people will take that as a signal and say, well, I'm gonna buy the stock here. Well, if you would have did that, Let's say you would have bought it here and just held it. Or you held it to where it crossed over again, and you can see it crossed over right here. Some people use that. You can use that as a signal. You can use it as any time that it crosses over, you buy and sell. Some people do it that way. But one of the ways I like to do is I'll use it for that. But I use it, the MACD kind of shows you the momentum of the stock, right? You see the stock going up. You see the stock making highs, and you see the moving average, the MACD making highs. But when you see it make this high right here, this high on the MACD, now I'm going to bring the relative strength down so you can see more, so it looks bigger, right? Look at this high and this high relative to this high, right? Now look at this peak relative to this peak. This is what you call divergence. This is the diverging part of the stock. Now you can also come back here and you can see the same thing right here. I only have it on a 1 year. Let's see if I can go a little further out. I'm gonna change the time frame to 3 years or 2 years. Just so you guys can see, I'm gonna go a little further out. One day, let's go. There we go. Let's go 2 years. And it's just so you guys can see right here. You see this right here? This is the same thing. You got a high, and you got another high, but it went lower. That's called divergence. And then what some technical traders would do, what I'll do, I'll come out here, I'll make a line like so. And normally when you get divergence, you look for trade opportunities. Right here, you would have got short. Same thing right here. This is divergence. That's called divergence. You look for a trade. Maybe you try to get long here. It just depends. I see that's $44 to $59. It's $15. So it just depends on right here what I seen with CrowdStrike. I saw this. Now I think even you could do the same thing with the relative strength, but one of the things with the relative strength index is you want to look at, you can see also divergence as well. See? But another thing with the relative strength is it has overbought and oversold. So once it reaches these levels, it's considered overbought. So you may be watching CNBC or something. You see a guy come on and then he'll say, and he'll be talking about a stock and he'll say at these levels right here, it's overbought. At these levels, it's oversold. You're looking to buy the dip, and this is what they're using. For the most part, they're using an RSI. There are some other, you got the CCI. You have there are other indicators, but for the most part, the main indicator that they're using is the RSI. It's the basic one. And what I'm gonna do is, if I want to bring these back into, I'll come over here and hit. I right click on the screen, left click on auto arrange. It brings it right back into focus. So basically, this is a basic chart setup for any platform, for indicators that you want to use to trade. And you can use, and when I say triggers to get in, you can use crossovers up here of the MACD when these lines cross over one another. It's really up to the trader. Or you can use when they cross over right here, which would, this right here would be considered a downtrend. Or you can use when it crosses over the Wilder's smoothing moving average. One of the techniques is when it crosses over the moving average, you wait to see if you get a retest. So that means that once it crosses over, you want to see price action pull back, touch the moving average, which is what we call a retest, because it crossed over. Now we want to see price come back and touch the moving average, test it, and then break away again. So it came back, touched it, actually came back and touched it again, and then popped down. That's when you want to get in. So basically, if you're someone who shorts stocks, meaning you want to trade the stock on the way down, you would get in on the pullback. You may hear somebody say, well, buy the dip. They will say, buy the dip. A lot of people just say they buying the dip because they see it go down. But how do you determine what the dip is? One way to determine what a dip is once it's oversold. When you see it hit these oversold levels, then some people can just come in and just buy it and invest and then hold. And what I did tell you guys in this video, you can use any time frame. This is the daily time frame. I like to use the daily time frame to do, my charting. That is the most in my from what I've seen, even when you start researching and reading up on candlestick patterns, and these are candlesticks, and so you're looking at like pennants and triangles and flags and things of that nature. Most of that was developed on the daily time frame. So that's what I use most of the time. But we can come in, I can drop this down. I can go up to a week. Let's say you're an investor and you're looking to hold. Come to a 5-year weekly. This is the 5-year weekly. And so on a 5-year weekly, you could just say, whenever this MACD line crosses over, I'm going to buy. Wouldn't have made too much money right here. You can say I'm going to sell when it crosses over. You probably wouldn't have made too much money there, but when it crossed over right here and you got in, look, you just held. So you can come down to the hour. Let's say we come down to the 5-day, 5 minute, and you see the same things. When you trade on a smaller time frame, you're going to be in and out faster, than you would on a daily. You may hold a daily trade for a month. 5-minute trade, you may be in it at when the market open, and you might be out of it at 10 o'clock. Opening bell 9:30, you might be out at 9:45. Some people trade the 1-minute chart. Every now and then I'll scalp, but for the most part, it just depends. But for the most part, I'm looking at the daily chart, and I'm positioning my trades around that. So one more tidbit before I go, I'll show you the trade that I have on in CrowdStrike. Basically, I just bought a put. I bought an out of the money put. I'm up like $2 on it right now so basically I seen divergence, which you guys can see. I saw the divergence. It came down here, touched the moving average, pulled back, which is basically like a little flag or something like that. Broke this low. So all I did was, I do something like so. You got to be able to pull the trigger. I don't over analyze. I'm either gonna take the shot or I ain't. That's that. Got this little area here broke out, and here's your little pole, and that's it. I'm in it. And how I determine, I'll make another video to show you how I determine what strike I used, and and it's an option, about an out of the money option, a put. And so tune in to the channel if you like what I went over today. Subscribe, hit the like button, ask comments in the comment section if you want me to do a video on option trading and how to choose a certain option and what delta to use, some of the Greeks, theta, vega, gamma things, and how those things affect your options. But if you're just buying stocks and stuff like that, then none of that is relevant to you anyway. Or if you're trading Forex, or, you're trading futures outright. But I hope you guys got something out of this video. Once again, it's your boy TerrenceRe, the active trader, and I'm out. Peace.